Okay. Good afternoon and good evening and good morning to everyone joining us from the world. My name is Ulukola Olusheyi, and on behalf of the entire DataIntell team, welcome to the DataIntell Summit 2025. It is truly incredible to see the virtual room filled with brilliant minds across the continent. We have professors, industry leaders, researchers, and students from all over the world, all united by a critical question. How do we build AI systems for finance that are trustworthy and fair? Over the next 2 hours, we are going to explore these questions together. We will hear from leading academics who are defining the framework for responsible AI. We will learn from industry practitioners implementing these solutions in the real world. And most importantly, we'll create space for dialogue, because the path to trustworthy AI fintech requires all of us together. But before we dive into today's incredible program, I would introduce someone very special, my co-founder and partner in this journey, in person of Mr. Odeshola Oluwasegun, who is going to be introducing what DataIntell is all about to us. And then we'll briefly, be introducing our sponsors as well. Thank you very much all for joining us today. We really appreciate your time, and we hope you are going to all learn from each other today. Thank you very much for joining. Mr. Shegun, over to you.
Okay, thank you so much, Ola. Good afternoon, everyone. We welcome you to DataIntell Summit 2025, from bias to fairness. And it's a privilege and to have all of us here today. But before we start, I would like to share with us a quick story of how DataIntell started, and how I have a personal encounter with bias in an unexpected environment. In 2014, I was a final year student in Federal University of Agriculture at Beokuta, which I was working on my thesis, which is my final year project. And my project is on developing a forecasting model for HIV patients in Oyo State. Because of the complexity of this project and sensitivities of this project, I had to travel from Alabata, which is in Abeokuta. I traveled down to Oyo State to University Teaching Hospital, College Teaching Hospital in Oyo State, to gather materials and data. After like 8 weeks, a friend of mine called me. He's from another institution. He's also in his final year and he's writing his own project. He said, "Guy, Alpha." He was speaking in Pidgin language, basically. "Guy, Alpha, you don't finish your project?" I said, "Yes, I submitted 8 weeks ago." He said, "Okay, can you, wait till you work on, like this?" He said that, what was my project topic? I said, developing forecasting model for HIV patients in Oyo State. He said, "Guy, can I see that your project?" And I said, "You want to see my project?" He said, "Yes." I kept quiet for some time. I said, "Okay, no problem." So I forwarded the project to him, the data, everything about the project. I forwarded everything to him. And after forwarding to him, I forwarded everything to him, unknowing to me that my friend actually submitted the same project topic, the same project, the same data. He submitted everything, even from a chapter 1 to chapter 3, he submitted everything to his supervisor. He approved the project, unknowing, thinking that it is the project, the guy's actual project, that it is his original work. Because there was no how for him to verify or to check either the project is for the guy or it's not for him. because my own project sat down in my university archive. His own institution has no way or no access to verify or to check or to be able to see if that project exists before or not. And when you talk about plagiarism detecting algorithm, we all know that plagiarism detecting algorithm works more or largely for projects that have been published. Not all the billions of projects or research work that are sitting in many of our universities in Africa. So in that case, as at that time, a lot of things changed in my life, and I thought of a lot of things at that time. But I later realized that this challenge or this problem was not about myself or my friend. It's largely a systemic problem. Imagine we have like over 200 million students in higher institutions globally, and millions of them completing STEM degrees every year, but only a tiny fraction of their work or research work ever published. As we speak, there are countless brilliant ideas dying in archives, and researchers working in isolation. They are unaware they are all covering the same ground because there is no cross-institutional verification mechanism as well as no global dictation system. But here is what really struck me. Published researchers are protected, but the system was completely biased against students like me. The system didn't even see my work, and to detection algorithm, my work it simply didn't exist. That's bias, not intentional, not malicious, just systematic invisibility. And I asked myself a simple question as at that time. How do we make a system fair when it's being programmed to see certain kind of people? Second question that I asked myself, how do we build transparency in AI system that it can easily detect when they are biased or unfair in our algorithm? This same question is what we call data intel today. And that is the same question that brought you and I here today for us to learn and to see how it's been done and how we can apply it in our various work. And that's we have Dr. Iba from TISA University, who is going to take us on about policy and framework to build a fair system. We have Mark Rudak from Guinea Machine that is going to reveal to us how Guinea Machine is being used to detect bias in AI system. And we have Naomi, who will be showing us how we can deploy large language model responsibly in terms of financial context. And we have Joseph from TISA University to show us how AI can be explainable. So at this point, I am honored. But before I go, I want you to know something. It is you and I that is going to develop the next generation of AI. It is you and I that will decide if 2030 AI system will have the same challenge, the same problem that the current AI system is having in 2024. It is you and I that will make that decision. Now it is time for us to go into this. It is time for us to learn from the researcher, from the experts that have been in this field for years. It is time to hear from it. It is time to know step-by-step approach how we can embed this thing in our next application, in our own research. Now I am honored to welcome Dr. Iba. She is a lecturer in TISA University, a lecturer in AI and data visualization. I am honored to welcome her.
Hi, thank you.
You are welcome. Thank you so much.
Thanks a lot for the invitation, Olio, and it's my honor also to be here and just deliver my presentation about bias in everything in data and collecting the data. So so it's fine, right?
Yes, it's okay.
Yeah. So it's not navigating framework building bias free, and it seems that the screen just hiding the text. Okay. For free and fair fintech and AI. So first of all, I will just introduce myself. I'm Dr. Hiba Smadi, a lecturer in Teesside University of Department of Computer and Games. So all the time, I'm just working with AI and the human impact, and this is what I'm insisting also the time with my students. There's projects that to be fair and having impact on humans, whatever the aspect they are using. And now I have many projects in AI, healthcare, sports science, and education, work on competitive grants, supporting a responsible AI UK and other future life institutes. So as we will go in this journey, we will go about how understanding the AI based and fintech policy and regulations now that it's coming in the world, what are they and what they are looking for, building bias-free systems, how we can build a bias-free system, what we need, and then for takeaway and future outlooks, what would be required to have fair systems. So that we have understanding AI in bias and tech. So we have different types of having biases. For example, if we can talk about historical data biases, like training data reflect the past discrimination, facial recognition. If I say an example, for example, what look like the physicists before and like olden times will look like. And systems that they will demonstrate faces of scientists, but mostly men. So that stereotyping or the vision that we need, we eliminated the women scientists part from this vision. Also, for example, if we like all the time we have this example of if you consider a square and you need to write or draw, let's say, a shoe. So everyone's you have a different types of shoes, but sometimes you want the system to recognize one type of shoe. So it's called AI bias. So biased feature selection, which is that approximate variables like zip codes and name indirectly encode to sensitive attributes. So you can indirectly be biased by choosing the variables or choosing the features. So, like for example, try to say that more years of education, that mean more smarter people. It's not true. It's biased, but like sometimes also the BMI, for example, for body mass index, that yeah, it's an indication of fat mass in the body, but it's not true. Sometimes the age, the gender, health issues, all plays a role in doing the fat body, for example. Algorithm design choices, interaction bias occurs when humans teach algorithms to recognize particular data instances in skewed ways. This is how we are, just like you need to for example, choose attributes for zip codes in certain areas than the other areas. So implicitly will be bias system. Deployment without this testing. So after we all know all what we need to test our system and have regular tests as well. So we just launched the system without diverse testing scenarios to amplify the bias across the real world application. So it will not include all the sample data or does not all the real data that we can include in the study. So in fintech, we have real-world bias examples, like significantly what it's doing, lowering the approval rates of certain demographic group despite the similar financial profiles. So there's just like it goes to different group, let's say professionals or certain areas. Postcodes also, they are very they are functioning as a proxies, so they use it as a proxies like indication, the postcode, what is the social, uh, let's say, status. At the same time, they're having assumptions that we need to have approval of this loan, we don't have approval for this loan, or we prefer these customers in these areas, not these areas. All these just can having a critical impact of bias like services that have served consequences of people livelihood. So this demographic that we and historical data are used not for loan approvals, for economic opportunities, which is not fair and not looking for the impact of humans or enhancing the lifestyle for humans or people. It's giving, we are choosing who will approve or not. So now, what it's matter? Why it's just now? It's now. If you notice and if you look at around in Google Scholar articles, and now all the trend, let's say now is just like, is the algorithm is your system is fair, is not biased, is bias free? Because now we know all. Now we have the applications of AI techniques and different aspects like LLM or like OpenAI or generative AI or AI agents. A lot of data can be used and can be a system of produced, but at the same time now there should be regulations that give you the indication that this is fair, this is yes working system, but it's covered all the, let's say, the samples area or aspects. So we have regulatory compliance, so EU AI Act informants and FCA requirements are creating mandatory fairness standards. We have reputation management, so this is like public backlash and just discriminatory of AI and infertility damage brand trust or customer relationships. Revenue opportunities, so bias systems exclude profitable customer segments, leave money or on the table, something like that. Legal risk mitigation, which is that costing companies millions of settlement and damages. At the same time, now we have also talent advantages. Companies are actively seeking professional with AI fairness and expertise, that they are aiming to have systems that cover all the we call it sample, or just we call that, or aspects or different categories of people. So in a way that it will be used fairly for in the company, at the same time for the people, people. So what policy regulatory frameworks we have? I will just go through three: the African AUU and AI Act 2024 and UK Financial Conduct Authority FCA. They have their guidance for fair treatment principles. So let's go for the first one, EU AI Act. Now this is like a union introduced a comprehensive AI regulations with specific requirements of high-risk AI systems, including financial services applications. Now what it's doing, just briefly, I just went through all the guidelines in three. It's just like a lot of guidelines, like kind of like 60 or 80 pages. So we need to look at. So measures to prevent the mitigating algorithmic biases, transparency requirements or automating decision making, human oversight mechanisms for high-risk applications. For the FCA, it just designs the guidance on fair treatment principles, specifically when tailored with financial services. It's all online, it's all available. Anyone can read it, so they can have a knowledge how to enable fair, thriving market for consumers and economy through consumer duty requirements, risk-based supervision, and algorithmic systems, principles-based approach in innovation and fairness. And all of us, like AI, let's say, people and doing like some let's say, systems, whatever we are working on in universities or companies, we need to look at these regulations, and we need to have a look how we can make our systems not bias free by following the guidance that we have according to our countries. Also, we have from the perspective of African and Nigerian context, we have some challenges, credit files, millions of potential customers lacking of formal financial history. We have 60% plus informal economy workers. We need to solve this problem. Digital divide, which is smartphone ownership of reliable internet access, creating access barriers. So we have regulatory environment, the Central Bank of Nigeria. So they have issued this directive in querying license payment system to mitigate the ISO 222 messaging standards, implement mandatory geographical identification of payment terminals, which is good. And we have a Nigeria data protection regulation also established data governance requirement of AI system handling the personal information. So the way how to handle the personal information and let's say keep the professional or the personal or the sensitive data safe in our economic transactions or anything. So the strategic opportunity or the things that we are looking for in Nigeria, which is build fairness into systems from the start rather than just recatching later. So international standards, we looked at EU, AU, UK, Nigeria, and here some examples of organizations that already they are establishing principles of AI fairness. We have ISO IEC 42001, IEEE P7003, NIST AI risk management. This is very good organization that looks for trying to have a bias-free systems and bias-free employment, even like they are hiring women with alongside with men, so they can just not having a bias even in the working or in the employees working in their organization. Or OECD AI principles, international guidance emphasizing fairness, transparency, accountability, and human-centered value in AI systems. So these are, from this part 2 and 3, we are now aware what is the bias systems or just like the bias around us in machine learning or in our AI techniques. And now, as we saw that we have a lot of organizations that now are aware of how to set and build regulations and guidelines for humans to build a safe and bias-free systems. So building fair-free system comprehensive framework, embedded fairness, transparency, and accountability into AI systems from inception through deployment. So there are 4 principles. We'll go into details, but as I said at the beginning, we need to look wherever you are. You are just a company, a data analyst, or any or even a student. You are going for a big project, or even an academics like me. So you need to look for these regulations. And also, I face some not problems, but we can say that some unbiases in systems that we are not deploying, but like when we discuss with other institutions, they say we need this, yeah, but we need to cover all the sample, all the aspects of the system, and then you can having a working system, and then you can see the results. So fairness by design, embed fairness consideration by very first day development, ensuring equitably outcomes. So this is from the first step, which is the data collection, should be fairness, and transparency and explainability, which is make AI decision interpretable and understandable to users, regulations, and stakeholders. No secrets, no hidden things. Everything should be, no proxy variables, should be everything on table, start straightforward and very clear for both, like, let's say, the clients at the same time, the organizations, owners for the system. Accountability governance, establish clear ownership structure and define roles and responsibilities for AI ethics, continuous monitoring. We all know that we need to implement ongoing systems and validation for catch-up, bias, drift, or any maintenance variables fairness that we have over the time. So if we go in details, now we'll go into details of the in the four principles, fairness and design. So the core fairness metrics, understanding, this is the first, the core, understanding the problem. All the time I'm saying my students, you need to look, understand what is the fairness metrics and critical for building equitable AI systems. So you need to go, what is the objectives, what is meant to be this system, and who will get this benefit from this system. Should be all. So demographic parity, so we ensure equal approval of selection rates across the protected groups, not selective. Equalized odds, so maintain equal true positives and false positives rates across the demographics and calibration, which is verifying the predicted probabilities match actual outcomes consistently. So yes, again, like wrapping up what I already discussed. So the fairness starts from the very beginning of machine learning pipeline or any system that you are using by collective representative data samples to reflect real data, real world diversity. And this is really, we will not say a problem, but we face this challenge that we need sometimes to find the sample, sometimes not. I decided, or just the student decided, yes, I need this sample to be under a study, not other samples. So if we need to be fair from the very beginning. Identify and avoid the proxy variables, as we mentioned, that proxy variables that can leading to unmeasurable, implicitly unmeasurable features. As we mentioned, like if we talk about body mass index, it's just like called a proxy variable because it is more like it's categorizing a little bit for people who's having more fat than the others, but at the same time, it's not that much true. Conduct comprehensive fairness testing before productive deployment. Of course, we need to test, we need to have a validation and evaluation for our system before deployment. Transparency and explainability, which is that why we have transparency matters. So as we mentioned at the first start, we need to follow the guidelines wherever we are, increase legal requirements and fundamentals. So right to explanation and EU AI Act mandate transparency for high-risk systems. User trust, so people more likely to accept. This is why we are using, we should be transparent, so they are they more likely to trust the systems, the AI, because at the same time now AI is to serve humans, not the opposite, not to replace or not to create biases between them. So we need to make sure that our systems are fairly used and fairly made. Debugging capability, explainability help teams to identify fixed source of bias quickly. Of course, as we said, let's say continuous maintenance and continuous testing will avoid these biases. Or Tools and techniques, technically, I think in the upcoming sections also you'll talk about it in details. SHAP, we have provide features for importance analysis showing the inputs and drive predictions. We have local interpolator model longest explanation. LIME generates local explanation for individual predictions, or model cards, which is standardized documentations for detailed model behavior limitation and intended use cases. Now we'll go to principle 3, which is accountability and governance. From this side, we need to be clear ownership for designated AI ethics officers with authority and help deployment, build across functional teams spanning technologies, and establish a clear decision right for model approval and deployment. Robust governance, we are just also create AI ethics review boards, and again, this is very trendy now, and this is like, let's say, all people for AI aspects, they are asking themselves, is it fair to use this system for example, another sample data? Or is it fair that this system is just like to use it with the same students or the same sample, let's say, sorry, with a different environment. So this is one of my colleagues, a professor in business school, she was telling me, are you sure that that the system that you created, for example, let's say diagnosing heart disease, for example, just roughly, is it going to work in every right on every sample of the hospital? Even in UK, we didn't go outside the UK. So it was a big question and there was a big debate at that time. Yes, it's so that she's having a point, but at the same time, we need to create AI ethics review boards to evaluate high-risk systems, maintain comprehensive documentations for all development decisions, and implement detailed audit trails capturing model versions and changes. So if you do that, maybe it will be working for more data or more or aspects, all categories of data. Principle 4, which is continuous monitoring, which is the very required step all the time. And for whom are working in companies, they know how much it's not the deployment of the system is more important than the monitoring or just follow up with the system. So AI system don't remain static after deployment. There's a lot of change, data drift, input distribution shift over the time, use populations and behaviors evolve. Sometimes companies, they want to deploy the same system in different countries or different cities, so you need to adjust this, or you need to at least test the bias. In this case, behavioral changes, user interaction, and patterns change affecting model performance. Emerging groups, new protected groups may emerge the required consideration. So by reviewing fairness metrics monthly at the minimum, you need to track also user appeal and complaint and early warning signals, configure automated alert when metrics degrade beyond the threshold, conduct a quarterly deep dive audits for model behavior. So this is the, let's say, the basics, or let's say the major points we need to follow when we have a deployed system, and we need to have it bias free all the time. So we need to look for behavior changes. We need to look for, now it depends. Sometimes it's by, you need to expand the system, or if you want to just to change the category of I are looking for, so whatever it is, so you need to have following of the guidelines. You need to follow this is the first, you need to be fair from choosing the data and doing your system, and try to have a continuous monitoring as it's required all the time, just to having this system just behaving well, let's say, and be fair for all people. And at the end, we need, as we said, that we need to AI to serve us as humans. We are healing with algorithms, not the opposite. So building a fair AI system requires commitment, expertise, and ongoing vigilance, and uh, but the reward is transformative. So takeaways that we have fairness is not non-negotiable. Now we are just, as we mentioned, that we have a lot of institutions in different countries that they are aware of that and they are issuing guidelines to follow. And even the companies, they need to have deployment of systems that are fair and bias-free. Data quality first, the foundation of fair of AI, higher quality representative data, fix the data issues before investing in complex algorithmic solutions. It's the very, very basic and the very, I call it like this is the major task after deployment or deciding which AI technique that you can use. Design. So you design embedding fairness by designing the start exponentially more effective than cost effective. So like you need to have you start from the beginning how when the designing to have a fair and not having like a biased image or vision or let's say personal let's say desires or something like that. Oh, but it's not personal by the term personal, but like it's from the company or the organization point of view, of course. Never stop testing, and this is we said that it's continuous monitoring is essential. Data changing, new biases and violation, or just like sometimes we need to apply it in more organizations. So we need to even the organization itself, it's getting bigger or something like that. So we need to include more data. So we need to be fair, and we have to be monitoring all the time just to have consistent bias-free systems. So if we talk about the future of fair AI, I think now we are all just aware of that, and the evidence of that. This is the event that we are in all that. This is very important. So to build a bias-free systems. So organizations are shifting from addressing the bias after deployment to preventing from the beginning, as we mentioned. International frameworks are aligning around the common fairness principles, creating consistency across the market and just directions. And we have also accessing and testing tools. Now there we have a lot. So that is just making accessible to team for all sizes. And I think the bigger companies, they are providing these tools, just like the advanced tools to having bias-free systems, fair AI becoming market differentiator, companies that deal it for fairness, win the customer trust and loyalty, of course. So reputation, it's building about reputation. It's not like we have like small ones and at the end we have a big one. It's better than have a big one and then we lose the trust of people in this organization. Career opportunities, this is very massive demand now. And during my journey and my readings, and that feels like now testing the algorithms to be biased or not, testing the algorithms that they're detecting the biases or not. Now this is the trend, to be honest. And it's under massive demand, as I mentioned. So as I mentioned before, AI, its ethics is very important, and AI is just to serve humans. We need to direct the AI to serve our demands. At the same time, we're healing with algorithms. Thank you for listening, and I'm ready for any questions.
Thank you, Dr. Hiba. That was incredibly insightful, especially your four principle framework, fairness by design, transparency, and explainability. accountability, and governance, and continuous monitoring. These are exactly the foundations we need. And thank you very much for your time. We'll move on to the next speaker, and then after Joseph finishes his presentation, then we can take a general question for you. And now, building on Dr. Iba's insights, particularly that second principle of transparency and explainability, our next speaker is going to take us deeper into technical side. And Joseph Jacob will share with us more insights on explainable AI and interpretability. Because as Dr. Iba showed us, we can't have fairness without transparency. So we need to understand how this AI system makes decisions, not just what decision they make. So in this light, I introduce to you Joseph Jacob. Is a data scientist and analyst with passion for explainable and ethical AI. He recently completed his MSc in applied data science with distinction at Teesside University, where his research focused on predictive modeling and model interpretability in sports analytics. So Joseph is going to, dive deeper, to give us more insight about what Dr. Iba has, just shared with us. So please welcome Joseph Jacob on explainable AI and interpretability. Joseph, over to you.
Thank you very much. I will just quickly share my document. Thank you everyone for your presence today, and we'll be talking about transferring the explainability techniques from the project which he has talked about, which is the sport analytics, into fintech, to see if there is a way we can use the same explainability in the fintech sector. And also, what ways can this help to tackle bias in AI system? So majorly we'll be talking about AI in fintech, then going to fair lending issues where we've had explainability being a key issue in the fintech sector, and also talking about the explainability techniques that was used and how it can be used in fintech. Sharp, which is the major explainability, will also be taken into context here before driving basically into bias identification using this transparency technique. So with that, I'll quickly jump in so that we won't waste too much of our time. AI in fintech. So there was a survey. Actually, surveys usually are taken regularly, 2 years, 3 years, by the Bank of England and the Financial Conduct Authority to understand how the fintech services in the UK, how they actually make use of AI in their processes. In this survey, 72 of the UK financial fintech say they've been using or developing. Actually, the figure was 65 of them say they've already started using it, while 14 are still developing AI in their system. This also increased in the 2024 survey to around 85, meaning more people are incorporating AI into their systems, which calls for understanding where there are risks. And the survey also showed the risk area in terms of the consumers, the customers, and also the company. In the customer area, they said data bias was one of the key risks, while lack of transparency was and interpretability was an issue with the companies, because you need to understand how your models are making decisions. To talk about bias and how we can actually tackle bias or identify bias in a system, there are several techniques. One of them, which has been mentioned, or two of them, the explainability, also the fairness metric, has been mentioned. Also, counterfactual testing are being done to surface bias. And what does counterfactual do? It's actually a theory that will say, would the outcome change if a sensitive attribute was different while everything else remained the same? So you change just one of the features or one of the attributes, but leave other things. Will the prediction change because of that little change? So is monitoring those changes that could occur while just tweaking something. So it's able to show if there's a bias by tweaking a data. But the main focus for today will be on explainability too. And because of that, we'll also be taking a look at issues in terms of fair lending, where there have been issues in explainability. So there are two cases here that have been projected. I will talk about them briefly. The first one, the DFS issues, was actually based on an Apple Card issue in 2019, where people say that the Apple Card was sexually discriminating, meaning it offered women lower credit limits than men, despite having similar credit worthiness, meaning they have the same borrowing amount, how much they'll be giving back, how their age, and several other factors. But they wanted to see why they were having this different outcome, despite the fact that they have similar characteristics in terms of their credit worthiness. So the DFS decided to make findings. They decided to make research, and after doing that, they discovered that although it might seem that people are having that issue, but the major reason was because there were some people who were using probably their spouse card, and they felt because they are using their spouse card, they should have the same credit score, which wasn't supposed to be the case. Everybody should have individual credit limits and credit worthiness. And because of that, they discovered that there was actually no fair lending violations. And Apple had to also give better explanations to the DFS team. Majorly, they didn't want to reveal all of this to the public because of privacy issues. While in the second issue, it was an allegation also by the Student Borrower Protection Center that the Upstart lending model also was resulting in educational redlining. It was based on the fact that they said graduates from colleges and universities that has history of having Black people in them were actually being offered a very high interest rate compared to those that were situated in white predominant institutions. Because of this, they have to also perform different findings, checks to understand how their model worked and if there was actually this issue in the data. Although they realized that they made use of education and employment data, but there was no correlation between all of those and the issue in play, which was the fact that Blacks were being given higher interest rates. Although more checks are still being made, but that is the present situation, that the model does not actually discriminate. But what we can take out from this is the fact that the lack of transparency, which means because people don't actually know why they are receiving a low credit limit, there's no explanation. This actually can lead to people thinking there's an actual discrimination. even though the model was not discriminating, but because it was not being explained, they don't know why they are being given that credit limit or credit score, which takes us to why explainability actually matters. Just from what we've talked about, it leads to a lack of transparency, which can look like discrimination. Trust, when people don't understand why they're getting low score, they begin to question your system. And also, another reason why it matters is because explainability is not only about the technical aspect, it's also about the social aspect, as you can see. If they've not taken time to ensure that they should be able to explain, then they would know that socially people are going to also feel some type of way about how they get their limits and their credits. They're going to be able to say, even though you've said you've accounted for it in your technical area, you should be able to explain to people because they want to know about it. So the bigger question says, if a model is accurate but not explainable, can organizations trust it? Which takes us to the model that was created. This is in the football industry, which is a different industry, but which has the same problem, which is explainability. The aim of our project was actually to identify most important metrics contributing to a football performance. So if they are going to win a match, what are the major features that contribute to it? In this kind of model, it's a high-stake model, which means predictions matter. You should be able to predict at a very high rate. And also, explainability also matters. Why is this prediction making this prediction? Why has it made this prediction? What are the top factors that made it to predict a win or a lose? At the right-hand side, you see the different models that were used in our experiment, and logistic regression actually performed best amongst all of the models. But the issue with logistic regression was it gave a global insight, meaning you cannot know why a specific team is actually winning. And if you can't make that, then you cannot explain to that team why you made that prediction. It's only able to make a general prediction based on the old training that's based on the old data set. This is why it is performing this way. But based on a specific team, it won't be able to make that prediction. That is why we made use of sharply additive explanation, which is transparency in AI. Dr. Iba mentioned about SHARP when she talked about transparency. And what does SHARP do? SHARP actually assigns each features. When you train your model, there are several features. So it takes each features and assign a specific score to it, meaning this is number of percentage this feature actually adds to your model prediction. It combines every possible combination. Where that feature is not there, how will the model perform? When the feature is there, how will it perform? So it uses to gauge how all those features actually impact, and it gives it a value. That value is called sharp value. The sharp value quantifies every impact of the inputs. For example, you can see there, it can say feature 1 adds 0.15 importance, while feature 2, 0.09. So you can see that feature 1 actually adds the highest. Similarly, you can also have negative importance, meaning the negative says the more you have that data, that feature in your data, the lesser you are going to get the prediction you are looking at. So how does this help? How does SHARP help our models? Our modeling are majorly black box model. When you predict, you use predictive modeling. They are black box. What does black box mean? Meaning you do not know how that how that model is predicting. You just know that it takes in data and it helps you predict a score. Let's say Middlesbrough Football Club is playing against Swansea Football Club. It takes the data and then says Middlesbrough Football Club is going to win. But you don't know how it actually made those predictions. What features did it say, did it make use of to say that is why they will win? And then explainable AI like Sharp, which helps to get those features, turns a black box system into a white box model. White box model is just a model that you can explain now. You've been able to predict. Now you can also explain why this model is performing this prediction. Sharp in football. This is an example of a sharp explanation in football. At the left-hand side, you can see different figures from top to bottom. You see the ones which are at the top are actually higher, meaning they have higher importance. They add more importance to predicting that game. You can also see that there are some that are negative, some are positive, that is left and right. Those ones that are negative, the left, means the more you have these figures in your data, the more that team are likely to lose that game. While the one at the right shows that the more they have that data or that feature, the more they are likely to win that game. And the data by the right also is a data from a picture from Power BI, incorporating all the features into. Remember, we said we were trying to know how to explain each games, not just the general game. So the picture down there, you can filter. For Middlesbrough, you can know what were the features. For Swansea, for whatever team you want to check, you can just filter through and to show you the features for those teams, so you can know why the model predicted for each teams. In credit scoring, remember our major purpose today is to see if you can move the same explainability from football and sports into the financial system. In a scenario where a customer applies for a loan and receives a credit risk like of medium, they've seen this, but they do not know why they had the medium risk. Sharp can help you. Instead of just giving only the score, Sharp actually breaks this down to why the model has reached that decision. And this is just an example, just like what I showed earlier on. The positive area, the negative areas, someone who is having an income of stable income for the past 3 years, we have that reducing the risk, meaning there won't be high risk for that person. So someone who also has missed his payment, meaning that will be increasing the risk of you giving that person a loan or a credit. So this all shows you an example of how Sharp will explain. It will show every feature and why it has made that prediction. We will also be looking at bias using bias identification using Sharp, because we've been able to explain, but how does this influence bias identification? So that's the next step. So bias identification in credit scoring using Sharp. This is actually what we have here is actually an experiment that was performed by Ramon and Renato in 2021 in Brazil. It was just a model to understand the mechanism of racial bias in a modeling system. After they predicted the credit default to see probability of if people are going to default, that is, if people are not going to repay a loan, if they collect a loan, with these people, is there a high possibility that these people will not repay this loan? they were able to predict that and get the explainability. The explainability is what we have by the right with different features. But after they started predicting or checking for several other people, they realized that the CEP3 there was giving varying figure. Sometimes it is positive, while sometimes it is negative. So they decided to take a good look at it. So the CP3 is actually the first 3 digits of the Brazilian postcode. So it's related to different areas in Brazil. When you have the postcode, it actually relates to different locations in Brazil. So they decided to check those values and plot it on the Brazilian map. They noticed those at the northern parts had high risk, meaning the CP3 increases the risk of them not getting loan. While those are the southern part, the CP3 increases the possibility of them getting that loan. So this was baffling, and they decided to get the census data from for Brazil to be able to see an estimation, the proportion of people who have said they are not white using that same CP3 code. And then the top, the image at the top is the one they plotted, while the image at the bottom is the one that they plotted from the data gotten from the census. The upper one is from the SHARP, while the bottom one is from the census data. So what they noticed in the census data also was that more people that said they are not white are the northern part, while the less people that said they are not white are the bottom, meaning southerners are more of white and the northerners were more of the darker skinned people, which automatically showed that there is a geographically definition using the CEP3, which also carries a racial information. They call them proxies, as Dr. Iba has mentioned. These are just data that carries some information, even though they are not supposed to, but in a way they've carried an information that relates to something else. So it's just a postcode, but it carries a racial information, which automatically is making that data biased to a set of people. So this is a way where explainability and transparency can actually help you notice bias in the system, where you understand why it is making the prediction, and also you see whether there's actual bias from that system, from spot to fintech. So why does this transfer, that is the transfer of explainability from the spot work that has been done to fintech, why does it actually make sense? Number one, it helps with credit risk decision making, like we've mentioned, where instance level explanation can be made. You can easily tell someone that your credit was declined because of these 3 behaviors, and you list them, list the percentage of how it has impacted it, and they understand why. So when next they're applying for a credit or a loan, they know what to work on if they've become better in that aspect, and they'll know their possibility of getting that loan. It also helps in debugging, which it also helps in debugging, where you can identify patterns, just like we're seeing right now, biased proxies, unstable features, and also features that are also contributing to disparate impact. It removes the black box modeling pressure. We talked about black box, because when you don't know why a model is performing a prediction, you wouldn't even want people to question you, because when they question you, you don't know the answers to give. And lastly, regulatory or decision accountability. That there is no case that will come up which you won't be able to come out to say why, because you have the explainability to these, or the explanations to these questions. So to conclude, I would say fair AI is actually non-negotiable. And when we can explain a model's decision, we can trust them, definitely. And this also leads to us building a much more better product, better team, and a much more better product and better team, and a better financial system. Thank you. Thank you very much. This will be all from me today.
Thank you very much, Joseph. That was very, very insightful. And from the chat section, I can see a lot of, questions coming in from the chat section. A lot of people have various questions, about this fairness and, the explainability of AI. And like I said, thank you for, the great presentation. That was insightful as well. So we're just going to move straight, to the question and answer section, because time is not so much on our side, and we don't want to keep everybody waiting for too long. So the first question I'm seeing on the chat, I think this is for Dr. Iba. And the question is saying, what are the most common source of bias in AI system, and how do they manifest in practice? So Dr. Iba, please, you have about 60 seconds for us, please.
Yeah. Again, what was the question?
The question is, what are the most common source of bias in AI system, and how do we manifest in practice?
Okay, so
how did they manifest in practice?
yeah, the most common sources is the data, as we mentioned before. So you need to be careful when collecting the data, and you need to be careful when trying to cover all the categories or the aspects that we need. At the same time, pre-processing, even the feature selection, we need to avoid the proxy variables. So this is from the beginning. If you start working fairly from the beginning, it will. This is the main sources of the biases. And the other part of the question, sorry,
how do they manifest in practice? How do they manifest in practice?
Now, in practice, we need to, first of all, if you are an employee, you need to look more. What is the company or the institutions look for? What are the regulations that you need to follow? This is like before beginning. At the same time, you need to have a knowledge what is the fair system, what is not fair system, or the bias system, bias-free system. What is it? So you need to go in deeply. According, let's say, I'm all the time saying example of an AI analyst or AI person in a company. So you need to be aware of these things. At the same time, what is the institution intentions? All this, when you collect all these data, with all these information, with the proper source of the data and proper pre-processing and manipulation of the data, so you will get out with a bias-free system. At the same time, as we mentioned, with continuous monitoring. It's not that deploying experiment and you have the outputs. No, it's more than this.
Thank you very much, Dr. Iba. That really, that was really great. And also for Joseph, another question for you is from the explainability side. Can tools like Sharp help identify these bias sources? Joseph, you have 30 seconds for us, please.
Yes, they can actually. If you've seen from the presentation, one of the experiments that was shown there actually identified bias using Sharp. I'll just reiterate that again, so maybe you didn't get that earlier on, or probably the message was sent before that was being said. First, the Sharp actually helps to explain. Then from the explanation, you can see where there are variabilities. when you're predicting for several type of, because we have different characteristics, whether by age, by location, men and women. So when you check for these people, you can see if your model is actually using, if there is a disparity, there's a variation in your prediction in terms of explainability. If there is, then you can still check how your sharp affects those areas. Then you can see if there's a negative or positive. From there, in the data, the CEPT, which was the location, was given the people at the north, which was the people who were more darker. They were having high risk. They couldn't get loan quickly than people that were at the bottom because it was using CP3, which was the location. So the location was actually giving a bias in terms of race because some people were at the north, while some people were at the similar thing. You can take that into a place like Nigeria, whereby you have northerners, you have southerners, you have easterners. When the location actually is biased, you can easily see that probably maybe the north people are getting more of the loans. And then even though it's using location, but it has already become biased. Somebody who is at the north, who is not supposed to get that loan, might get that loan more easier than someone who is at the south because the model is already biased.
Thank you very much, Joseph. I think that's really, really great. And so I think currently we we have a lot of questions in the chat right now, but because of time doesn't permit us, so every other questions that we have in the chat will definitely get answers from Dr. Iba and Joseph himself, and then we'll try and relate all those answers to those questions via email to all our audience. Thank you very much for those questions. They are really, really insightful. So currently, in the next 45 minutes, we'll be proceeding into the industry perspective of, AI fairness and bias. And in respect to that, I would like to introduce to you a very great and important person in the industry, someone who has, given out, someone who has, done a lot in the industry in terms of, AI transparency and bias in credit scoring and his Guinea machine approach. I'll be introducing to you Mark Rudek. He's a machine learning product owner at HES Fintech. He plays a key role in development of the cutting-edge machine learning platform called Guinea Machine, a no-code AI solution for data-driven decision-making. I would like to present to you Mark Rudek. Mark Rudek, you have the floor, and thank you very much for being here.
Yes, so thanks for the great introduction. And actually, hello everybody. I'm glad to be here. And so before we dive into the presentation itself, I think it's worth mentioning that there will be two parts today. So first part is the more of a theory. It's a bit of a context, what we are doing, how important things that we develop. And another part is actually the demo itself. And I'll be looking forward for your questions. So let's start. I think I want to mention just a few words about the product, what we do. Genie Machine itself, it's been on the market since 2016. So we are roughly 10 years on the market doing many projects in different countries, different regions. So we actually look from different angles to the business end. And so we gather the information and do many improvements ourselves. And the latest improvement actually we have is on bias, fairness, and so on. So I'm personally very much excited to share with you the approaches, some insights we do have as of now. So just a bit of context on regulatory, on fairness, bias, that it's getting more and more important as we are getting more deeper into AI AI is everywhere around us. We do use LLMs. We do use traditional machine learning algorithms. So there are more and more regulations coming up. And for example, in Europe, we do have EU Act and particularly Article 10 and 22 on data governance and automatic decision making. In US, currently, they've been implementing ECOA, and this is on race, sex, and age discrimination. And in LATAM and APAC area, it's just emerging, and mostly they've been focusing on socioeconomic proxies such as age, income, and geographical proxies. So just a bit of, because there will be a practical part after that and a bit of theory. So there are three kind of angles on how we are looking to the features. So there are direct bias identifiers, there are indirect, and according to GDPR Article 9, there are strict exclusion kind of data that is related to health, biometric, and political stuff. Talking about direct identifiers, those are usually gender, age, or race. Indirect proxies, they still must be validated. Those are just few examples of it. Those are zip code, marital status, occupation, and even device metadata. This is still kind of part of bias, but indirect one, because the device metadata can tell us a lot about personal location, for example, right? There are many kind of criteria how we should start looking at the bias, how we should start estimating it. And so worth mentioning that first is data representativeness. Is always, and actually is still it's written in AI Act, for example, that for every group, sensitive group that we are about to estimate, I'm talking about the bias, it should be some minimum sample size. So we are not talking about, for example, one sample in the training data. It should be some minimum sample size per group, and then we could start estimating and calculating the metrics. So actually we should use the freshest data when we estimate the bias. For example, we are about to release some scoring model in production, and the bias that shall be estimated should be actually estimated and validated on the freshest data. So our splits, training, test, and validation, those should reflect the reality. So the quality of the data matters. Here we are talking about the labels. So the labels shall be somehow verified. So it should not be random. It should come from the business angle, right? For example, if we are talking about the credit scoring, we should check whether the default or non-default actually happened. So, and the balance in the samples shall be somehow calculated. So, and there are restrictions on the synthetic augmentation, because maybe some of you know that there are some recommendations on if you want to estimate bias and you don't have enough sample size, for example, you can potentially generate some samples and estimate the bias. We call it post-bias estimation. So it can be done for fairness testing. But if you're about to release this model, if you want to use this in production, don't use the synthetic data. So for bias validation is fine. For model training is actually prohibited. So this slide is on the data, and we've been working with different types of data. And so this table actually shows that the domains that we gather in terms of data, it's auto loans, small medium enterprise, telecom, churn, microloans, and there are those are not examples, those are real features that are presented in this kind of domain-based data sets. For example, for auto loans, we are talking about age, gender, marital status. In SME, it's more kind of proxies for the business description, for example, company age, revenue, region of operation. In terms of telecom, we are talking about whether the person is senior or not, whether it has any dependence. So for microloans, sometimes we see in data the criminal record, for example, signifier or occupation type. So those are still the features that shall be tracked. So this slide is on bias metrics, and so there are basically, I would say there are plenty of metrics, but we mostly been focusing on these two. The first one is called disparate impact, and this is mostly on selection bias. And another one is EOD, is equal opportunity difference, and this is post estimation on true positive rates, and this is actually the performance kind of related metric. So, and there are few targets that we would like to achieve while estimating bias. So for DI, the target is from 0.8 up until 1.25. And for EOD, the target shall be 0.1. So it should not exceed this value. If some kind of areas are not being met, it should be signifier for us that something is wrong. We need to do something with the bias. And it's worth mentioning, I think, that fairness is not static. So because actually the machine learning itself, and for example, the, let's say, classification type problem, we don't predict the labels directly. We predict the probability of the sample to be related with the target. So, and here, when we estimate the bias, we should take into account that actually while we change in the threshold, the metrics, the bias metrics will change as well. So, and the goal of estimating the bias for different thresholds is to see whether when we move the threshold, model can become more biased or more conservative towards some sensitive group features. We will see it in a practice as well. And this is the description of the case study that I'll be showing in a few minutes. And here, for example, we estimate the bias for the feature senior citizen. So this feature is binary one. It has just two values. We want to understand whether the person is senior or not. And for example, and another angle is gender. And for this particular example, we see that for gender, male versus female, the test we conducted on bias in terms of disparate impact is almost the same for male and female. And EOD is also around 0. So there is no significant difference in true positive rates for different thresholds for male and female. And contrary, if we are talking about the age kind of bias, where we estimated senior versus non-seniors, we see that we got the warning, because for the higher threshold around, for example, 0.75, we see that our DI dropped to 0.56, meaning that when we move in the threshold, we start approving less and less seniors. So this is actually direct bias towards senior people. And EOD hits 0.23 minus 0.3, meaning that on 0.75 threshold, our TPR dropped 23% for seniors. They actually pay worse. This is a reality of what we observe. So we do have bias, but we also have the grounds, and a business angle can decide what to do with it, right? Maybe we should start approving more seniors, but still there are always two angles, there are always a kind of, so we always think about money from one end and bias from another end. So the few conclusions that threshold is very important in terms of estimating bias. What threshold we choose, it depends. It's actually coming from the business, how risky they want to be. So it could be calibration issue. For example, the model is likely miscalibrated for senior age group. So this is we need to be aware of as well. So an overall stats for all features for this particular example is DI pass rate is roughly 90%. Feature violation is 21%. So actually only 1 out of 4 feature got violated. And this is age senior group. And the final fairness score is 75%, which is quite impressive. And we will see the example in a real life demo of it. This is just the takeaways. So a few conclusions that those metrics were automatically detected, no manual work. So we align with all regulators, if you're talking about EU, US, APAC area. So what's more important that we calculated for different thresholds. So we do have granular visibility. And so we could do immediate actions because we know that there is bias in age. So we can make actions immediately. So now I'm switching the screen to the practical part. So this is actually the model that I previously described in terms of biases. So, and this is the main model screen. We can see here that it's roughly 7K of records were used in order to estimate the bias in order to build a model. So this model is quite predictive with 0.64 Gini index. So we want to also even get more details on the model. Overall, we got 19 columns in our data set with the historical default rate of 26%. So, and for sure, we want to dive into the bias itself. For this, we can download the report. And actually, so it got downloaded. Let me change the screen. So this is the screen that shows the fairness analysis on this particular data set. And we see that there is our feature senior citizen. And actually we see that there is violation that we discussed for higher threshold, that is 0.56. And so, and here there are even more takeaways out of it, that there are 4 features that got estimated for the bias. Those are all coming from regulations perspective, from business perspective, and we see that in terms of dependence and whether the person has partner. So we see that if it has for both sides, we see that DI is getting higher, especially for higher threshold, meaning that there is slight bias of when the person has dependent. We actually approve 50% more of these people. So in terms of EOD, we see that there is a higher EOD for higher thresholds. We see that, but still these are not kind of red areas. So it's quite good. In terms of senior citizen, we see that if the person is senior, so for 0.25 threshold and 0.5 threshold, we see that the drop is not so significant. But when the threshold is getting higher, of 0.75, we see that 56% less seniors are getting approved. And this is actually a significant bias in terms of seniors. So, and if we are talking about gender, the bias has not been detected. So our model is fully unbiased towards the male or female. And we see that for small threshold, which is 0.25, the value is fully matching. Here, the drop is slight for 0.5, and for 0.75, we got just 4% more females approved. And in terms of EOD, those are matching. TPR are fully the same for the small threshold. For threshold, somewhere in the middle of 0.5, we got the drop. And for just 2% drop in terms of TPR, which is not significant. As you remember, by the rule that it's called 80% rule in terms of DI and EOD, it should be close. So in terms of EOD, it should be close to 0. And here it's very close to 0, meaning that the bias has not been detected. And here, once again, I want to mention that as of summary, we analyze 8 segments. So every feature got 2 unique values, meaning that overall we got 8 segments, and just 87% of overall amount of segments passed the test significantly. And there are just few violations in terms of DI. Those are not very much significant. And for seniors, the drop was significant, meaning that for higher thresholds, still some bias has been presented. So, and overall, this model is quite good. I would say it, from the business perspective, it shows the practical implementation of what data we have, what biases we observe, how we detect them. And for sure, there are always the question of how we could potentially mitigate the biases. But this is, I would say it's good to discuss in Q&A because this is a wide topic as well. And I guess I'm running out of time. And so I guess this is the end of my presentation. I hope it was very interesting and looking forward for questions. And I'm passing the word to the next speaker. Thank you, everybody.
Yeah, thank you very much, Mark. That was incredibly powerful, especially seeing how Guinea Machine implemented those bias metrics in real credit scoring system. Thank you very much for that presentation. We really appreciate that. Your point about data set integrity and filtering critical, what's it called, representatives and temporary validity. Those are the exact practical implementation Dr. Iba and Joseph were talking about. So now we'll move on to our next speaker in person of Naomi Noor. Naomi is going to speak to us about responsible deployment of LLM in financial context. And Naomi is an AI engineer with over 5 years in technology and 3 years specialized in artificial intelligence with a background in computer engineering. And she's going to be walking us through the responsible deployment of LLM in financial context. Naomi, over to you. Thank you very much for being here.
Thanks. Hi, everyone. My name is Naomi, and I work at Basis Technologies as a senior LLM engineer. Today, I'll talk about something that's becoming increasingly important in our field, how to deploy large language models responsibly in financial context. We're seeing these AI systems everywhere now, but in finance, we need to be especially careful. Here's what I'll cover today. First, I'll show you where LLMs work really well in finance, but also the serious risks we face. Then I'll walk you through a practical framework that can help us deploy these systems safely. And finally, we'll look at the essential guardrails you need to have in place. So let's start with the exciting part. Where are LLMs actually useful in finance? First, in the customer service. Banks are using chatbots to answer common questions 24/7. Instead of waiting on hold, customers can get answers quickly about their account balance or how to reset their passwords. Second, document analysis. Think about loan applications or contracts. These models can read through hundreds of pages in minutes and pull out the key information that used to take hours to find. Third, risk assessment. LLMs can spot patterns in huge amounts of data, like detecting unusual transactions that might indicate fraud. And fourth, regulatory compliance. Financial organizations have to follow a lot of rules. LLMs can help monitor transactions actually automatically and flag anything that might be against the regulations. And finally, investment search. These models can quickly summarize earning reports, news articles, and market data to help organizations make better decisions. So the potential is huge, but here's where we need to be careful. The first risk is hallucination. This is when the AI just makes things up. Imagine an LLM confidently telling a customer that a wrong interest rate or giving investment advice based on completely false information. That's a lawsuit waiting to happen. The second risk is bias. If we train these models on historical data, they might learn and repeat past discrimination. For example, if banks historically gave better loans to certain groups, so the AI might continue the pattern, which is both unethical and illegal. And data privacy. These models see sensitive information like customer account numbers, transaction histories, or, for example, personal financial details. If this data leaks or get misused, it is catastrophic. And regulatory violations. In finance, there are strict rules about how you make decisions, how you communicate with clients, or how you handle data. So if an LLM violates these rules, the company faces huge fines. And the final risk is model opacity. This means we can't always explain why the AI made a certain decision. But in finance, if you deny someone a loan, you legally have to tell them why. So we need to balance innovation with responsibility. There is a framework with 5 pillars that work together to make LLM's deployment safe and trustworthy in finance. Think of this as the foundation you must build before deploying any AI system. So let's go through each one. The first one is governance, which is about having the right oversight and decision-making structure. At first, we need to form an AI ethics committee. This should include executives or technical experts, legal advisors, and compliance officers. They're the ones who say yes or no to new AI projects. Second, define your use case approval process. Not every idea is a good idea, so you need a clear process to evaluate whether an AI application is safe to deploy. Third, build a model risk framework. Treat AI models like you treat other risks in your organization. Document what could go wrong and how you will prevent it. And also do regular third-party audits. Sometimes we need fresh eyes from actually outside the company to catch problems we might have missed. And finally, we need to keep an escalation procedure documented. When something goes wrong, everyone needs to know exactly what to do and who to call. Fairness is about making sure AI doesn't discriminate. test for bias before deployment, and we shouldn't wait until after lunch. We need to check if our model treats different groups of people fairly. And also use diverse representative data. If your training data only includes one customer, one type of customer, so your AI won't work well for everyone.
Sorry,
And
man, we can't see it.
okay, is everything okay?
Yes, I think your screen stopped sharing. I don't know if that's on purpose or maybe it's a glitch. We can't see your screen at the moment.
Yeah, we can see you.
Can you see now?
Yes, it's back online.
Yes,
Thank you.
back online.
Yeah.
Okay. And we need to monitor for a disparate impact. Even after deployment, keep checking. For example, check are women being denied loans more often, or are older customers getting a worse service? So watch for these kind of patterns. Keep human in the loop. Don't let AI make final decision on big things like, for example, mortgage approval or investment recommendation without human oversight. And run regular fairness audits. Have external experts review your systems to catch problems you might have normalized. Transparency means being open about how your AI works. We need to document data sources. We need to keep records of where our training data came from. And we need to use explainable AI techniques. There are methods that help us understand why an AI made a specific decision. We need to maintain model cards. These are like nutrition labels, but for AI models. They document what the model does, how it was trained, and how well it performs. Disclose AI use to clients and be honest. Tell your customer if a chatbot is answering a question or if AI helped make a decision. And also we need to update stakeholders. Keep everyone informed about how you're using AI, like your board, your regulators, or your customers. Everyone should be informed. And security is about protecting the data and the model itself. We need to encrypt data, both when it's stored and when it's being transmitted. And we need to enforce access controls. And not everyone in the company should be able to access the AI system or the data it uses. We need to limit to those who need it. And we need to have a regular penetration and vulnerability checks. For example, we can hire a security expert to try to break into our system, and we need to find the weakness before actually the hackers do. And maintain AI-specific incident response plans. AI system can fail in unique phases, so have a specific plans for AI incidents is very important, not just general IT incidents. And we need to use a secure model deployment pipelines. When we update or deploy a new model, we need to make sure that the process itself is secure. Accountability means knowing who's responsible when things go wrong. We need to assign a clear ownership. For every AI system, someone specific should be responsible. Also, we need to log a model input and output and keep detailed record. If a customer complains or a regulator asks questions, we need to be able to show exactly what happened. Also, track performance benchmark and SLAs. We need to set a clear target for how well the AI should perform and monitor whether it's meeting those targets or not. Provide a stakeholder feedback channels and make it easy for user, customers, and employees to report problem or concerns. And finally, hold a regular review cycle. We need to schedule a regular meeting to review how the AI is performing and make improvement. Now let me show the practical guardrails you need to have in place when you actually deploy these systems. Our first, confidence threshold for automated decision. The AI should tell you how confident it is in its answer. If it's less than, say, 85% confident, we shouldn't let it make the decision automatically. We need to flag it for a human review. And second, mandatory human review for high impact outputs. Some decisions are just too important to leave to a machine. And third, real-time monitoring dashboard. We need to see what's happening right now. How many requests is the AI handling, or how often is it uncertain? And fourth, circuit breakers for anomalous behavior. This is like an emergency stop button. If the AI starts behaving strangely, maybe it's suddenly rejecting 90% of loan application, then it's normally reject 20%. The system should automatically shut down or revert to human processing until someone figures out what's wrong. And finally, regular retraining on current data. Because markets change, customer behavior changes, and regulation change. So if our AI is making decision based on data from, for example, 2020, it's probably making bad decision in 2025. So we need to update it regularly with fresh information. So to wrap up, LLMs offer incredible opportunities in finance, but they also bring real risk. The five pillars I've shown you, like governance, fairness, transparency, security, and accountability, give you a practical framework to deploy this system responsibly. And thank you for your attention. I'm happy to take any question you might have.
Oh, thank you very, very much, Naomi. That was really, really insightful. And what I love about this is seeing the full picture. Mark has shown us the technical implementation with specific metrics and dataset control. And Naomi has showed us the governance, transparency, and security framework that makes responsible LLM deployment possible. Mark and Naomi, can you both turn your camera back on so we can go through the questions we have? This is for Naomi. But I don't know. I think Mark should be able to help us with this as well. So it says, how different is measuring bias in LLM versus traditional credit model? So Mark, you have 45 seconds for us. Do you think you can answer that for us, please?
Yeah, I think
Mark.
I think Naomi can add up something. So I will be mostly on the traditional machine learning end. So as I mentioned, DI, EOD, those are the industry standard. And I can assume for LLM, mostly we should check whether there are any hallucinations in LLM, whether there is any bias. For example, if you're asking some question, so LLM should not respond only based on the gender, for example, or age. So I think, so the short answer is no, the approaches are not the same. They are fully different because traditional machine learning model is based on the tabular-like data, and LLM is based on the kind of on the, let's say, text-like context. So those are just different data perspectives.
Okay.
So this is my short answer. Maybe Naomi can add up.
Naomi, do you also want to add something on that as well? Because I think we have one question for you as well.
So we can go to the next question. Mark answered very perfectly. Yeah.
Oh, okay, thank you. So the next question for you is, what is the biggest risk of deploying LLM in sensitive financial workflows such as customer advisory, compliance, or risk assessment? And what safeguards are essential to prevent hallucination and biased outputs?
The hallucination is the hallucination and harmful advice is the most important challenge we would have when we train on a biased data set. So the second part of the question was what's a safeguard, are essential.
Yeah.
We need to, consider a diverse data set for training our models, and we need to check if our data is balanced, and we need to regularly check the fairness metrics with like error rates or demographic parity or AI 360 fairness metrics. So these are the, checking the diversity of the data set is very important in training or even fine-tuning large language models.
Oh, excellent insights. Excellent insight from the both of you, and thank you, Mark, and thank you, Naomi. Thank you very much. We have seen today in full journey from, Dr. Iba policy framework and Joseph explainability techniques to Mark and Naomi showing us the real world implementation with all its complexity. So this is exactly dialogue we need. The academic and industrial learning from each other. So thank you very much, both of you. So now we are going to do something interactive because everyone has spent the last hours and they have from brilliant minds about AI fairness in fintech. So now it is the turn of our audience, because our brilliant speakers, have showed us a lot of beautiful things. So right now we are going to dive straight, into our workshop section. Thank you for your time, Naomi. We really appreciate you. So we are going in the next 10-15 minutes. We are going to do a quick interactive workshop, and here is how the interactive workshop is going to happen. So we have a case study. It is a quick cash digital lending platform, and the digital lending platform is a company in Nigeria providing instant loan of about 5,000 to 500,000. And this company launched in Lagos about 2 years ago, and they recently expanded nationwide. So we'll have a breakout into a different section room, and in that room, every one of us will take our time, to a little bit of networking, introduce ourselves, and then we'll have a discussion about this case study, and then we'll come back to the main section after we've, answered these case study questions, shared our insights. Then we can nominate 1 or 2 people from our breakout rooms that will come and share, the answers to these case study questions when we come back from the break room section. So over to you, tech team. We are ready for our our workshop, and then when we come back, we would have to discuss about what solutions we came up with from those questions. Thank you very much for your time, guys. We really love seeing you here, and we hope you've learned from our beautiful speakers. I'll see you back shortly in about 10 minutes. Thank you. Yeah, welcome back, everyone. I think we are all just coming back gradually, so we are just going to wait for another 1 minute to let everybody come back in, and then we can discuss on our various workshop, what we've learned, and how to tackle our case study question. So we'll just wait for about 1 minute for everybody to join. I can see the numbers move. So welcome back, everyone, and I hope that we all had a productive 10 minutes or 15 minutes from our workshop section. So now we are going to hear from each group, just 2 minutes each. So we need to keep this moving, please, so we don't keep us waiting for too long. So we tackled the same question though, from each room. So we are going to take it room by room. I believe we already have each representative that we've nominated from each room. So I think we have 2 rooms in total. So the first room, you have 2 minutes to quickly give us a summary of what you discussed in the workshop and what your various answers and opinions are. And then from there, we'll go to, what's it called, room 2. So we take it step by step. So room 1, over to you, please, your representative. Please go ahead and let's discuss. So as we know, the case study, it is a quick cash digital lending platform, and we already have an idea of what the incidents are and what the training data are. So the first question is, identifying the potential buyer source, and we are asked to list at least 3 potential sources of the buyers. And then the second question is, how would you systematically detect these biases? And then the third question is, what action would you recommend to address the bias you identify? So room one representative, you have 2 minutes, please.
Is it, am I in room 1, group 1?
No, you are in
So
room 4.
You are in room 4, Mr. Olajide
Okay, yeah.
Oladipo, you are in room
Oladipo,
4.
you are in room 4, please.
Thank you. I just want to confirm.
Okay, room 1, our representative is Mr. Philip. I don't know if he's not out of network, but Mr. Philip, are you online?
Move on to the next room. Then we'll come back.
Okay, let's move to the next room, Mr.
Okay. So we'll move to the next room then. So I think for the next room, Mr. Olajide is our representative. So I'm just going to share my screen real quick so you can use that as well. So Mr. Olajide, over to you, please. So can you in 2 minutes quickly discuss what's the potential bias source that we've identified? And over to you, please.
Thank you, sir. Thank you for the opportunity. This is a very good case scenario of a quick cash, and we all know that we've seen the training patterns and also the training data has been given. So mostly the potential bias we have here that we have on the screen is one is the model input, and so followed by the geographical demographic gaps. And the third one is the data collection methods. Those are the 3 areas where we show the potential biases according to because of the data we have from the questions. Also, do you want me to elaborate more, or do you want me to?
Yes, please. Just in 1 minute, if you can elaborate why we think these are the potential sources, that would be great as well, please.
Okay, yeah, thank you very much. Now, from the incidents being given is a very simple incident, and we are there's a favoritism for newcomers, and people already in the industry already have an experience. So because of the data we are being given, the main dominant factors rules the area. So from those potential bias sources, we can see that the model input is glaring to us because they support the male aspect over the female counterpart. Also, the age. So somebody you are giving it somebody that's already maybe doesn't have experience.
and maybe someone has already been practicing that area. Maybe it's from his younger age and going to the moving to a certain age with more years of experience. In the second area is geographical and the demographic gap. We can see clearly from the trend data we have that there's a biasness in favorism of Lagos area than someone coming from the northern area. So that is one bias sources we also identify. And the third one is the data collection method. So the method whereby they are collecting it from mostly from sources. So the sources where they use it to collect these data are not really visible. But the only thing we notice is just like they give more the sectors of people. The people that are employed in these sectors are more formal sectors than the less formal sectors. So, but that's another way it gives a favoritism to the people from the Kano than people from Lagos. I'll move on to the next slide. Can you come on the next slide, please?
Yes, please.
Yeah, so thank you. So in the data approach, what we did is, first of all, because we're already saying the biasness, we pinpoint it, we need to, first of all, examine these features features importance. We need to examine it. We need to examine it in the area of the way we'll approach it. So because we're approaching it more of male data gathering than the female. So we need to check, we need to analyze our approach according to the demography, according to the region locations. And also when we look at this, when this thing has been checkmate, we need to now to test the model with edge cases. We need to introduce different things that we can need to augment, not to favor one area than the other, so that we can have a good cash flow loan giving out. So when we now look at it, we will now compare the outcomes of what we use in terms of the features importance and also the demography. So when all this is done, we now have a breakdown of reviewing the process from the first one, step 1, step 2, and step 3. So we just like when we do, for we to review it, we need to go back to the first 3 steps, which is going to help us in our data approach. And also in that aspect, any new thing comes in, we can also refine it and also have a good outcomes. So those are the detailed approach we're using to move into that area. And also the latter area is the mitigation strategy. So for you to mitigate this, we need to first of all remove the problematic features. And you can see that the problematic feature is mostly we are favoring more of the masculine than the feminine. And maybe because of the area or region, or maybe the population of maybe the southwest is more than the northwest, but that is not really so. But I can't say because of we don't have full data on population aspect. I will use that to justify. So we need to remove the problematic features. We need to adjust our model weight, what we use, the memorandum we use, and also after we adjust the model weight to see the checkmate, they will now need to add a fairness constraint to ensure that everyone has a share of dividends, everyone has a share of interest to access to loan, everyone has a share have an area in which, okay, my view is seen in applications, and also it will now be easy for people to have an access to loan, regardless of the area or the locations they are, and their gender equality. Thank you very much.
Yeah, thank you very much, Mr. Olajide. So we'll go to the next room real quick. We spent a little bit of time there. So what's it called? The following room, please. You just have 2 minutes. So just quickly present your solution to us, and then we can move to the next. Thank you very much.
So what we have here, I will not really explain. So based on the group, we agree on data collection method. And the second one is process variable and discriminatory policies within the organization. Then geographical demographic gap. We also have in slide 2 that the first step is to review data composition, examine the feature important, compare the outcome. Then analyze the approval rate by demographic. Then you can now test the model again on the edge cases. Why the last one, we said retrain with balanced data, create human review process based on the training received from Naomi, hard fairness constraint. And this is exactly what we agree on in our own group. Thank you so much, everyone.
Okay, thank you very much for that quick and awesome presentation and insight. So what an incredible day, actually, because when we begin this program about 2 hours ago, we asked ourselves, how do we build a trustworthy AI in fintech? And Dr. Yiba gave us the framework. Joseph gave us the tools, and Mark and Naomi showed us the real-world implementation and how you all contributed your insights just now. Thank you very much, everybody. So building fair AI isn't easy, but it is necessary and it is possible. So within 48 hours, you will all get a recording slide and a summary of everything that has been done today, both the answers to the workshop questions as well, and also every other questions that we have on the chat that we were unable to answer during the question and answer section. We'll make sure we get answers from our speakers, and then we'll email it to everybody one after the other. But in the absence of that, thank you very much. Thank you to our speaker, Dr. Iba, Joseph, Mark, and Naomi. Thanks to all our sponsors, IQ Vista, IQ Oversea, RTech, Afritech, and Guinea Machine. And thank you to our team. We really appreciate every one of you. Thank you for all the consistency and everything. Well, keep asking hard questions and keep demanding transparency. Keep building the future we want to see. So thank you for joining DataIntell Summit 2025. And that will bring us to the close of the summit. And it's really, really wonderful, to have every one of you here. And I hope you all have learned something and you all have something to take away as well. Thank you for your time. And on behalf of DataIntell Summit 2025, I say have a wonderful night, have a wonderful day to everybody. Thank you very much. Yes, sir. Thank you.
Thank you very much.
Thank you,
sir.
Thank you, sir.
Thank you very much.
Thank you very much.
Thank you very much.
Thank you. Thank you very much.
Thank you, sir.
Thanks immensely for the knowledge.
So when is the next program?
Thank you very much.
For the next program, we'll be relating via email.
Thank you, everyone.
Thank
Yeah, thank you.
Okay.
Thank you very much.
Thank you, everyone. Thank you so much. And for those of us that are still in the house, you're going to get a message, a link in the next 48 hours on how you can download your certificate for participating from the beginning of this program to the end, and especially for participating in our workshop.
Can we get the materials?
Please, can we get the material?
Mail everything.
Can we get the materials?
Yes, you will get that in your next email. Once you have that within 48 hours, you will get that, even including your certificate. So you can go on with that. So thank you so much, everyone. It's nice having all of you around. Next program will be.
Thank you so much.
Bye.
Thank you so much.
Such an impactful program. Thank you.
Goodbye.
Thank you.
Bye.